Hey guys, Vulcan Trader here. Got a video today on how to buy the dip or technical analysis for value investors. But before we get going here, if you like this kind of stuff, hit the subscribe button for me and the notification button and hit the like button to help me out here. Try and put only unique, information, unique information, content packed videos here. Nothing redundant that everyone else is putting out there. So if you want more stuff like this, then yeah, hit that subscribe button for me. Help me out. Okay, so to get started here, buying the dip, a lot of stock videos I've watched on it, they don't really. I haven't seen a lot of stuff that recommends it. One of the few I've read that talks about it is Matthew Kratter's book, Rubber Band Stocks. That's kind of how I first started kind of getting into this. But this is kind of a lot more modified version of that. But I think buying the dip is a valid strategy as long as you position size properly when you do it and either have a stop loss or position size small enough, and even average in on the way down is also valid as long as you position size small enough to where you know how much you're going to do and then you stop at a certain point if you plan on that beforehand. And a lot of people say, oh, well, only losers average losers. Well, I'd say it more likely is going to turn around if it's a solid stock, solid company that you're buying than for it to keep going down. It's only like growth stocks that don't make money where you have to worry about that on and have a real solid stop loss in place. But so anyway, but if you're a value investor, you're going to buy a company that's a real good stock with a strong moat. Okay, so I did this today on McDonald's. So McDonald's is a strong stock with a strong moat. I think it's probably the best fast food stock out there that's public. One better than it would be Chick-fil-A, obviously, but Chick-fil-A is not public. But I think they got good quality food, better than like Taco Bell, Burger King, etc. And they're not going away anytime soon. But there's some news came out recently about their CEO and having a relationship with one of the employees, and I guess that's against company policy. I didn't look into it too much, just heard it from my wife on Google News, but it's always a good indicator, whatever the public's seeing. So anyway, the McDonald's I knew was going down. I was kind of had my eye on it for roughly, wasn't watching all the time, but so first, if we for the technical, so that's our fundamental analysis. You want a good company that's a S&P 500 stock that has a strong moat, like I was saying, and I'll get to other examples after this. And then, they're making good money. So obviously McDonald's is making money. There's their PE. They get, debt to equities. Anyways, they don't have a ton of debt, but it's a good solid company that's making good money, and there's no one else that's going to give them any good competition kind of in their space, and they're going to keep going, keep growing. So for the technical piece, we need two indicators here, and those two indicators are, if you want to add them yourself, go up here. It is the RSI, which is Relative Strength Index. So you just click that one, add it, and that's this one right here. Just leave it on the default settings, and the other one is Bollinger Bands. So click this here, BOLL, Bollinger Bands. So hit that one. Or you can hit the star next to them, puts them on your favorites here. Okay. So once we got that, we want to check the weekly. So we go to the weekly chart. The weekly RSI and Bollinger Band is going to be different or wider and harder to hit than the daily. So we're on the weekly chart here, and anytime you get a weekly bar that goes below the lower Bollinger Band, that's a big oversold signal. And then you also kind of want your daily RSI to be below 30. So we got that about here. I wasn't really paying that much attention to it. I was kind of waiting for, the news cycle kind of finish. But anyway, we got earnings and finish. You get an exhaustion gap down here. It's another good thing to have. Same thing happens on the upside in stocks. Whenever you get a gap up at the end of a strong move, it's usually about the time to sell into strength. And then same thing here. You get an exhaustion gap down here to buy the weakness. So I actually bought some McDonald's at the open here today. Seems like it's bouncing, huge volume coming in. And then also thing we got here is we got support right at this line. Okay, so anyway, you want like a daily RSI. See the daily chart here. Daily RSI below 30 right here is a good oversold signal, and then the weekly below the Bollinger Band here. And then if you get an exhaustion gap on the daily along with it, that's a good thing to combine with it. Don't have to have that, but I'd say you need at least the daily RSI below 30 and below the weekly Bollinger Band is a pretty good setup, or just even below the weekly Bollinger Band itself. Sometimes you never get a perfect world. Sometimes if you can get a weekly RSI below 30 and below the weekly Bollinger Band, that's perfect signal. I think we got one on. I'll show you. Starbucks had that last year. Is like the perfect buy point if you look right here. Okay, so I'm on the weekly chart here. There we go. So Starbucks, see right here. Here's the lower Bollinger. It broke below that. You get an RSI of 30. Boom, buy it right there. You'd have killed it. So that was, and I think Starbucks PE at that point was about 15. So if you're a value investor, you want a PE that you kind of, the general S&P 500 market PE is like, I think it's about, 28, 30 something at the moment. You can look up the Schiller PE ratio, just Google that, and that'll tell you what it is. But anytime you get significantly lower than that on a solid company, then, it's a good buy point. So you'd have bought right there, and you'd have nailed it on Starbucks. And Starbucks obviously has monopoly on chain fast food coffee that's not going away anytime soon. There's no competitors really in the space, so solid monopoly. This is stuff you want to buy for the long term, maybe in your 401k. The only thing is we're kind of at the end of the stock market cycle, so it's not like buying in 2009. This is probably towards the end of that, but this even give, as long as the general market doesn't crash, this will give you something maybe you can hold on for a year or so, possibly, let's say. But maybe if you get enough gains in it, it goes up enough, it could turn into a long-term holding that you never sell. So we got that at McDonald's. I'm hoping, if I timed it right, could be wrong, you never know. Nothing always works out, but I think this is a pretty solid buy at McDonald's here, and you could still buy it. It's still pretty close to anyone else that wants to pick it up. Then I'll show you some other ones of these that I found. And so you can find these one way is to go to the S&P 500 heat map. You just Google S&P 500 heat map. And the first one that pops up is FinViz here. This is how I did this on Intel and Google a while back. I didn't hold on to them, but I learned I would probably better just hold on to them long term. But I did Matthew Kratter's rubber band strategy on it, where you buy at the lower and go to the middle. And I'll link to his book on that in the description here. But anyway, so you do 3 months performance, because the stock market in general has been going up. You want the general market to be in an uptrend, and I've talked about that in my other videos. And you see right here, so you want something with a solid moat or monopoly, kind of like what Warren Buffett talks about. And so McDonald's, you see here is in the red. So we go, check McDonald's, and daily RSI is below 30, and the weekly is below the lower Bollinger Band or getting close to it. If it's not there yet, you can wait and then start averaging in somewhere about here as it goes down, and you eventually should get a bounce and hold on to it. And then sometimes you can get something like happens here to go up, go back down. It still doesn't really go below this buy point. You also get stuff like Google, where you kind of have this happen multiple times. Here's the weekly. You'd be buying anywhere right here, and then bounces up, hits the all-time high. Sometimes maybe you'd buy around here, one of these, RSI below 30, and then you sell once it gets back to the all-time high again. Just put in a limit order up here. Maybe like the third time it's about to do that, then you want it to go through. So same thing, Google here. First, second, third, it's most likely going to break out and continue this time. So maybe you bought this one, you're going to hold it. And I actually did buy that one. It worked out perfect. But then I sold it somewhere on the middle band here instead of holding on to it longer, realizing it's actually a great thing to do is just hold on to these longer when you get these buy points, do it as a value stock. So right here, look, below the weekly RSI, I had bought it right there. Well, I saw on the weekly is below here, so you go zoom into the daily to find your daily buy that week the first time that happens. But that's all I did. Look on this screener, and I looked at like 6 month, 1 year performance, something like that. Google was red, and I was like, oh, Google's a great company, right? They got a monopoly on Android phones, on the Google search, on and they got the new quantum computing out, et cetera, et cetera. So And then, so you got inside bar here. And then, as soon as the inside bar break, you could buy right here. But really anywhere right here would have been fine. Here, you got the RSI below 30, you buy. If you bought the day of the RSI, anytime RSI is below 30 here after the exhaustion gap down, once it hit outside that weekly Bollinger right here, then, perfect buy point on Google to buy the dip there. And look, we're about to break out to new all-time highs here, kind of like Starbucks did before. So you just do that. So same 3 months performance, and you find out McDonald's, but you do maybe 6 months here. See if there's any others. Amazon's decently low, but doesn't meet this criteria. And then stay away from oil and gas. I'd say not really what we're looking for as far as long term. So same thing on Intel. It showed up in the screener back here. As soon as it hit right there, boom, outside the weekly Bollinger, touched it one time. And there's a lot of big institutions, I think, that watch these levels on these big cap stocks that are solid companies. Intel has a monopoly on pretty much processors on desktop, laptop computers. Only competitors AMD, which AMD's actually been doing decent too recently, but for the most part, they have monopoly on that. And had a low PE around this point, still does actually. You value these a little bit different, but anyway, just has a solid monopoly, solid business, not going away. You bought weekly, RSI goes below that. Really all the indicator you needed there, but you can also look at went below the Bollinger, but we can also look at the RSI here, which was that May? About May time frame. Same thing. So RSI below 30 we had. But then you still wanted to wait for the weekly Bollinger, which is about this point, which is the perfect bottom. And then moves all the way back up here. And then you could maybe try and sell here or see if you can hold on to it longer. Same thing on Micron Technology. They got a monopoly on memory for not monopoly, but they're one of the biggest players in memory. All computers need memory, and they're a huge producer of that, one of the biggest. And so same thing here. What was this? It's this one. So in May, right below the weekly Bollinger, you buy right there. Boom, bounces right up. There's the bottom. And let's see what others. So Starbucks, we should mark. Let's see, Google, Apple. Apple obviously has a monopoly on Apple phones. This one, you would have been averaging down on it, but we actually had. So this one, if you would have waited till the the problem is we're in the downtrend in the general market here, so you got to be more careful. They're going to go a lot further there, and you want to wait whenever like the S&P 500 is in a downtrend, like below its 50-day moving average and 200-day moving average, let's say, or even just below the 50. You got to be a little bit more careful. Right now we're in a general uptrend, so just a simple daily RSI below 30 and weekly below the weekly Bollinger on any of these will do good for you. And when the S&P 500 is in an uptrend, but then when it's not, then you kind of want to be more careful. Maybe wait for a weekly RSI below 30 plus the weekly below the Bollinger Band here, and that has to go down farther. In other words, whenever the general market's in a downtrend, but you see that worked out pretty solid if you would have done that on that one. And then Microsoft be another one. They got a monopoly on. Apple had a monopoly on the iPhones, and pretty much if I didn't say that. And Microsoft has a monopoly on desktop computers and, the Windows operating system. Plus, them and Amazon combined are pretty much the only players in the cloud computing space. And they're doing pretty good in that. But so right here, Microsoft had 2 times it hit below the weekly here and here. Let's see, that was end of 2019. But it had only one time that the daily RSI hit below 30. So that combined with your weekly below the lower would have been the low here. That would have got you that spot right there. Perfect. So times when it doesn't work, but like Amazon would have been a tougher one to get here. So you see we had 3 times below. Let's see, 3 times you had the. This is when the general market is in a downtrend in October to December of 2018 here. So you had 3 spots. You would have been trying to buy the dip and missing it the first 2 times. Then, and then it's even up here. You got the daily RSI below 30. So I mean, nothing works perfect all the time, but it's still a pretty solid strategy, I think, for buying it. I mean, buying breakouts doesn't work all the time, right? Or any other strategy, but I think this is pretty good stuff. And I'm starting to like buying the dip more. It's just not talked about a lot, and I think it's valid if you position size properly and cut your losses. Still, probably need to worry about cutting your losses more in the growth stocks. Like I said, some of these you might want to hold long term, but better if you got an environment maybe like 03, 09 or something like that where the general market's bottoming out. But still might have some stuff like this, solid staple like McDonald's. Like if you look at, I mean, even in 09, McDonald's still didn't drop terribly much, and something like this wouldn't have been too bad if you would have just held on to it. See right here, I mean, McDonald's went sideways for the most part in 08, 09 instead of dropping with the general market because it's just a staple stock. People are going to always be buying food, cheap food, burgers. So, but that's it for this. Like, subscribe, hit the notification button, share my stuff, and just trying to help people out here and teach them really good content. Thanks, and have a good day. God bless.